What's going on? We're going to break down the overall markets in this video here. So we're going to be looking at the S&P, the Nasdaq, US oil, and the TSX. For shout out to my Canadians, because the TSX is looking juicy. So here we go, right? We're starting off with the S&P. I'll let you know that the S&P and the NAS look very similar from a technical perspective. So we've seen the markets have a very structured pullback over the past 3 months, and it's led us right back into this range here where we've had some previous confluence back in 2021. So I like the looks of that, right? If we look back to COVID, it was pretty much one straight month of pure blood that brought us down 33%. But when we look at this sort of correction here, it's been around 13%, and it's very structured and long. So this has created a lot of fear in the markets, maybe not as much as COVID, but if you look at some of the names that are in the S&P, that are in the Nasdaq, they've gotten demolished. So that's what gives me the sign that, this could be a bottom here. So what we want to see next is some sort of a higher low, right? We want to see this downtrend reverse and change into an uptrend. So in order to see that happen, we'd have to see some sort of a higher low being created next. So what we could be looking for is maybe a back test of this zone here, this trend line. It might take a while. It might not even happen. We might also create some sort of a bull flag in this area. So again, a bull flag is just a pattern that we're looking for that indicates that we'll be continuing upward. So either way, it's still creating a higher low. So that would be nice to see, right? We have this 4 days of straight push right up out of this wedge. And that's given us a sign that it's something good to be looking forward to in the markets, especially when you see names that are related to the S&P, that are related to the Nasdaq, also like individual names that are also getting that push higher, setting those bases at low price points. So it's given me signs that, we have a hot summer and spring to look forward to. But for now, what we want to see is that higher low. Same thing with the Nasdaq, right? Now, when we look at the Nasdaq, we could zoom in a little bit further to maybe the 8-hour time frame, and we could see that this zone here has had serious confluence, right? We have some support and then resistance in this range. We're at that zone right now. We might need to weaken it a little bit further. You know what I mean? Right now we're just straight up into this range. We might get a reaction where we might need to spend some time in this range to weaken this zone before we get the next leg up, which is nothing wrong with that in my opinion. So it would also be interesting to see, right? Right now, what we're looking for in US oil is we're looking for a lower high. So we've marked this high, we create a low, we're looking for some sort of a lower high, right? And I'm thinking it's going to be anywhere between the 110 and the 116 to 120 range. And why I think that is because when I use this Fibonacci retracement here, this golden pocket is around the 116, the 0.5 is around the 111. So it wouldn't be surprising if we get some sort of a lower high that brings us into this range. Now, when we talk about US oil compared to the Nasdaq and the S&P, they've been inversely correlated over the past few months. So, and that's evident because if you look here, right, this is around December, oil has been ripping. But if you look at the Nasdaq since December, it's been the opposite. So they're inversely correlated, which means, all right, come on. Which means that if we're expecting there to be some sort of a lower high here in oil, it could lead to some consolidation in tech names, in the S&P growth names. So that's fine to see, especially because the last week we saw big pops in a lot of names. It was really nice to see some green in the market, right? So it might introduce some fear into people if they start seeing those names get a bearish reaction for a week, maybe two. But here's the thing, all that's happening is that there's being a lower high that's being set in oil, which means this is going to continue going up. And if they are inversely correlated, we'll see some of these names like in the Nasdaq and the S&P going downward a bit, which would completely make sense from a technical perspective, because we do need to set that lower high in this range, and then we also need to create that base and weaken this zone over here. So low key, things are shaping up perfect right now. I am not too worried at all. And now when we look at the TSX, this gets me pretty excited because there's random names in the Canadian market that look juicy, right? Some of them are crypto related names. Either way, they're on the TSX, but we have this resistance point, right, at 21,000, and we're creating higher lows into this range. So we want to see this continue, right? Higher low, just so we could weaken this zone, and then we get that breakout. So the TSX as well is looking very good too, man. So again, I'm thinking that this summer, maybe late into the year, we're going to see a nice little bull run before to kind of get out of this downtrend that we've been in the Nasdaq and the S&P. So there might be some good opportunity coming up in the next few months. So that's the overall market breakdown. Peace.